Hello and welcome, guys. My name is Martin Jones, and as you can see from the backdrop on the green screen behind me, this is LSBF TV, London School of Business and Finance television. And we are presenting on AAT, and you can just see I love on my t-shirt here. The camera's quite close in actually. If I lift myself up a little bit, I love AAT, the other brand that is relevant for us for the next hour, for the next full session actually, and that is AAT, the Association of Accounting Technicians. And what a wonderful qualification that is, but not easy. This is the level 2 channel, and I'm with you for the next hour doing the bookkeeping, the foundation accounting for the next hour. And I can't think of anything more to say apart from let's do some work. So behind this green screen, behind this fake screen, I have a question. And the question relates to bookkeeping transactions, BTRN using the AAT abbreviations. And just to say what I have said for the last 4 weeks, I'm in fact recording an hour of bookkeeping. The first half hour, as you can see, on bookkeeping transactions, and the other half hour on bookkeeping controls. As I've mentioned on every recording when I've done this, the questions seem to me to be largely interchangeable. Yes, there's a little bit more of a feel actually of the second half hour really being a control procedure. So perhaps this session really is transaction recording and a control environment analysis in the second half hour. Perhaps this hour really does make a distinction between bookkeeping transactions and bookkeeping controls. But I don't think that undermines the basic message which I have conveyed every time that I've presented on this, which is if you're thinking of doing these two together, bookkeeping transactions and bookkeeping controls together in one sitting, in one period, there is an awful lot of overlap. And therefore what you learn in one is useful for the other, what you learn in the other is useful for one. Lot of transfer, lot of reinforcement, I think was the expression that I've been using. So I would encourage you to consider doing both papers together. Anything else I need to say? No, I don't think so. So as you can see, we've got bookkeeping transactions over my shoulder and reference to the time, which really helps me to make sure I'm doing the right thing in the right place. This is task 6, taken from a past examination from the 2016 real examination, online examination, what do they call that? Computer-based examination, CBE. So this is a real question taken from a real examination from 2016, but the AAT are keen to communicate that this is highly representative of what one would expect in 2018, indeed what one would expect in 2019 as well. In fact, this question is so representative that the AAT have used this question and indeed this whole examination as a sample exam, I think is how they describe it on the website. So it's become the specimen paper. Speaking of paper, this is a PDF actually copied into a program called Journal, and that enables me to write on this document and use arrows and that sort of thing. It's very useful for me to have these facilities, but I do recommend that you go on my LSBF and track down the specimen papers for level 2 and actually have a go at the specimen papers in the website online, so you get a feel for the way that you communicate. It isn't particularly difficult, I have to say. It's very natural. The way that the CBE examination works. Honestly, there's nothing to worry about, but on the other hand, you don't want to, the first time you experience a computer-based examination is in the actual examination itself. That can't be good, can it? So use the available facilities online to do a simulation, you know, in your own space and your own time, so that when you perform this examination against the clock, you're concentrating on the question and not the way that you're answering. You know, you're not intimidated by the use of the keyboard and so on. Because although these questions are easy, that's not true actually. Although this question is easy, and the others are okay, the main thing about this examination, I would say, is the 10 tasks completed within the time available and scoring 70%. It's quite a challenge. It's quite a challenge, and you don't want to be fighting with the computer. So coming back round in a circle, simulation, use the online simulation of the CBE to practice computer-based examination in your own workspace, so that when you do the examination for real, you're not fighting with the computer. But it's my job not so much to fight with the computer, but fight with the technical components, which is startlingly simple actually this week. I've had some real nightmares in bookkeeping transactions, you know, some real challenging stuff, rabbiting on about VAT. I mean, accounting for VAT is quite challenging and counterintuitive and quite advanced really in terms of the politics of how VAT works. So some of the tasks have been quite challenging. This one just isn't. So let me get on with it, because I know what it's like. All of a sudden I'll run out of time if I'm not careful, so let's make sure I don't do that. So here we go. Let's be good boys and girls and go straight to the requirement. There we are. How's that looking? Oh, I've just chopped off the top of the task. There we go. These are the totals in the discounts allowed book at the end of the month. What would be the entries in the general ledger? What would be the double entry? Well, here is the presentation of how the double entry is done. Oh, that reminds me, I must just get my notes, just my cheat notes. I've got to dive from studio to studio to studio when I'm doing this. So I've got to be very careful to make sure that you know, my head is all sorted. So I'll go and grab those notes in just a second. But here we go. We're going to communicate the debit and creditness here, as you can see. If I can just get my pen working as I want it. There we go. There and there. And discounts allowed daybook. Let's get into the language of that. Actually, you've just had that chopped off, haven't you? There we go. Discounts allowed. So if we are allowing the discounts, it means that the it means that we are saying to our customers, you don't need to pay the full balance that you owe. I probably need to say that again, don't I? Because it's quite a tricky little bit of double entry. It is just pure bookkeeping, but it's beyond the usual, you know, it's beyond the usual, just write off some bad debt or something like that. It is a little bit tricky. What we don't exactly know why a discount has been allowed, but the usual reason that a discount has been allowed is that what we often do when we're invoicing customers is we send them an invoice for the full amount and give them 30 days, but we say if you pay within 5 days, then you're allowed a discount. And then what we tend to do is we tend to just sort of leave it to them. There are different strategies that are used by different entities in order to manage their receivables, but a classic technique that is used by many entities is we just whack off a discount to them. Do apologise. We whack off an invoice to them and say, you know, there's the amount, that's the amount that you need to pay, and if you pay early, you get 2% off. And then we just leave it up to them. And then we just find out what they do when they do it. Either they pay after 30 days, in which case they have to pay the full amount, or they pay after 5 days, you know, they pay within the discount period, in which case they pay a reduced amount. But if they pay us a reduced amount, that will mean that the balance on the receivables in the T accounts will be only partially cleared by the cash that they pay us, which will leave a balance that they still seem to owe us, but they don't because they've paid us. And that's the idea of discounts allowed. What we're going to do is we're going to say to these guys, we're going to say, listen guys, it's cool, I tell you what, you can take advantage of a 2% discount if you pay within 5 days. Wait a second, I can see you already have paid within 5 days. Do you know what? You've paid 98% of the balance. I'll take that 2% of the balance off the ledger. You don't owe me that anymore. It's cool. And that's the idea. Now, like I say, it can be very stressful jumping from studio to studio with all hell breaking loose. So I'm going to go and get my cheat notes and I'll be back in a sec. I put a lot of effort into making sure that these are available to me to minimise the stress in jumping from studio to studio, so I want to be using this information. Here we go, it's just down here. Can you just see that flicking? It's just down there just to make me feel natural and relaxed. So here we go. Well, the main thing is that we don't... you know what? One of the things I really hate about this question is, I hope you don't mind me using that word, but one of the things I really hate about this question is you're never given any context to these questions. It's just so dry and so different to real life. In real life, you know what this 510 is and why the guy doesn't owe you and all that sort of stuff. You even know the guy. Who is the guy? Apparently it's someone called, you can see it later, I think. No, that it doesn't even say who the guy is that's taken advantage of the discount allowed. In real life, these things are so much easier because you can picture your customer, you remember that they paid you the 98%, you remember that they paid you early, you remember now that therefore they don't owe you the 2%, and you write it off. It's so much easier in real life. There you go, that's the end of my little moan. Okay, I'll get over it now. So this figure of 510 is the balance that's been left behind in the receivables that the customer doesn't owe us because they've paid us early. That's my little story anyway. So the main thing that we need to do is we need to take that, I'll tell you what, there's some good language that we can use here to get ourselves into this. The main thing that we need to do is to remove the receivable from the receivables tier count. And again, you might have heard me talking about this. Receivables are usually called receivables these days out in the real world. But there's an old-fashioned phrase that I'm sure you've heard called debtors. So you get receivables and payables, debtors and creditors. I'm not sure debtors and creditors works as a conversation piece, but in terms of thinking double entry, it's very helpful. So debtors are debit balances, and we have a remaining debit balance on our debtors that we want to remove. So we have a debit balance that we want to remove. So we credit debtors, or we credit receivables. And the usual name for the tier count called receivables is receivables. But the AAT are still using the very old-fashioned phrase, sales ledger control account. Now, this is made slightly easier in the real exam because what you have is a drop-down menu, and you'll probably be able to figure out which entry to use from the choices that you have in the drop-down menu. But you know, being completely honest with you, this is the language that they use for receivables, so let's go for it. Sales ledger control account. The AAT tend to drop off the word account, so I'll do the same. I think I might need to move this up actually. My shoulder's just going off the video. So I'm going to put it at the bottom because it's a credit entry. It doesn't really matter the order, but here you go. So it's the sales ledger control. Just wrote a bit big there, close enough. And that's to remove the whole 510. Maybe I need to change the scale. That's to remove the whole 510. And that's the credit balance to remove the 510. And then we need to accommodate the VAT. There's nothing I can do about the VAT other than just tell you we've got to accommodate the VAT. And then we need a corresponding T account to reduce the sales, because the sales figure, wasn't as big as we originally told. I find the figure of 510 quite hard to work with, so can I just give you the principle in the context of a simple sale with no VAT? We invoice 100 and they pay us 98 within 5 days, which is our discount allowed period. If they pay us 98 to pay off the balance completely, then the 98 reduces the 100 receivable down to 2, and we write off the 2 because they don't owe us anymore. But on the other side, on the P&L, what we recorded originally was a sale of 100. But if actually they're taking advantage of the discount, the sale isn't 100, it's 98. So we need to reduce the sales balance in the P&L. The way to reduce the sales balance in the P&L, in accordance with the rules of the AAT, is to have a separate P&L T account called discounts allowed. That's the way that the AAT view this, which is a reasonable way of viewing it. You know, you have your full sales figure, and you have your full sales figure, by the way, is a credit balance. You have your full sales figure, and you have your debit next to it, so you can see, you know, the volume of discounts that you're giving on your sales. You report your net sales in the P&L report to the shareholders in a limited company. But nevertheless, if you went into the T accounts, you could see just how often customers are taking advantage of the discount that's being given, which is useful information to the management, isn't it? So this discounts allowed T account is do you know what, I think I'll do a little draw off it. This is like negative sales in the P&L. Can I say that to you? This is like negative sales in the P&L. Is what that is. So it's a P&L T account that will be set off against sales in the final FS. And coming back to the VAT, always tricky to describe this. Anything to do with VAT is always tricky to describe, but let's just imagine that this story works. It's certainly sufficient to express what I want to say. We have invoiced a full figure of 510. We have invoiced a full figure of 510 to the customer. So I won't make you the customer, I'll make the customer over here. So we've invoiced 510 to the customer. Of that 510, 85 is VAT, and we've paid 85 to the Inland Revenue, Customs and Excise and Revenue, tax authorities. So we paid 85 to the tax authorities, but then we've said that the 510 sale isn't a sale, in which case the 85 that we've paid to the tax authorities, we have paid it to the tax authorities because that was the law, but now we realise that we shouldn't have paid it to the tax authorities, therefore we want it back. So in order to say to the VAT, I want my 85 back, we need a receivable from the VAT authorities, or a debtor from the VAT authorities, or as they know it in double entry, a debit balance. So that will be a debit balance of the, that will be a debit balance of the 85. And then of course, sales are recorded in the P&L net, and therefore the unsale that is related to the discount allowed is the full 425. I might come back and say that again if there's time, but I'm always wary of running out of time. So that's the double entry there, and like I say, I'm wary of running out of time, so I won't summarise that yet until I have finished part B, which is separate and different. So I'll say goodbye to that and bring up part B. Here we go. How's that look? Looks all right, apart from you just see the bottom of the double entry from the previous entry, but that's okay. One of the entries in the discounts allowed daybook is for a credit note sent to Jackson Jones for 70 plus VAT. What would be the entry in the sales ledger? gosh, it's quite tricky to explain the ideas here without going into great detail and completely running over, but the idea that AAT have is that there's this central accounting function known as the general ledger. But the general ledger, which has the T accounts, has the potential to be overwhelmed with detail as regards receivables and payables. And therefore, sitting outside the general ledger is the detail as regards receivables and payables. And the receivables clerk works in the receivables ledger, and the payables clerk works in the payables ledger, whereas the accountant works with the accounts in the general ledger. Now, the T accounting takes place in the general ledger, and that's where the double entry takes place, debit this, credit that. But the sales ledger is where we have the memorandum, that was the word I was looking for, the memorandum recording of the sales and what the customer owes. So the detail of all the customers and how much they owe is over here in the sales ledger. But over here in the general ledger is the full receivables. But what we have is this big bucket receivables T account in here. So this is a big bucket called the sales ledger control account, and that's where the total receivables is recorded. But the total receivables is also over here. But the total receivables is recorded at the bottom of a list. And where you have the list of individual customer balances is in this thing called the receivables ledger by the modern language, or by the old-fashioned language, the sales ledger. So there you go. That took quite a bit of explaining to get to the point. If you knew all that already, it's probably the easiest thing in the world. But if you've never come across these strange phrases that are being used by the AAT, then that explains that. So the sales ledger is first of all a ledger, so it's a memorandum recording used by the credit controller to collect the receivables due. It's in real life, it's really called the receivables ledger, and it sits outside a double entry, so you get single-sided entry, and it's used by the credit controller, and it has an old-fashioned name as sales ledger. Okay, enough said. So it's got individual memorandum accounts. They're often just done with pluses and minuses, to be honest with you, rather than debits and credits. But they can be done with debits and credits, and it seems like this one's being done with a debit and credit. So one of the entries in the discounts allowed daybook is for a credit note sent to Jackson Jones for 70 plus VAT. What will be the entry in the sales ledger? A bit of a strange expression, that. But what we're being told, without any politics, we don't really know why, again, is that Jackson Jones doesn't owe us the 70 plus the VAT. So what we want to do is we want to remove the amount that we're trying to collect from that customer. So the amount that we're trying to collect from that customer is the total of 70 plus VAT. VAT is always assumed to be at 20% at AAT. It is at 20% in the United Kingdom. So 20% of, well, 10% of 77, isn't it? So 2 times 7 is 14. So we add 14 to the 70 and we get 84. And we say to this customer, look, it's cool. We know that you don't owe this 84. I'll knock it off your balance due. And to be quite frank with you, as I say, it is more usual, to be honest, when you have a sales ledger to use pluses and minuses rather than debits and credits, but this system seems to be using debits and credits. So the debit is a debtor, a receivable, and we want the receivable to go down, so we credit the customer's T account to make it go down. And we need to make sure it's specific to Jackson Jones because the sales ledger records the details of all the customers. So Jackson. Wow, my writing is so neat this afternoon, I can't believe it. Jackson Jones, look at that writing, that is unbelievably neat. 84, and it is a credit balance because we want the receivables to go down. How are we doing for time? So we've got 2 minutes to go. Great. So I think I will very briefly summarize. What we're talking about in the context of both of these fellas is recording. Oh, that doesn't quite work. Works on my screen, but not on yours. So there we go. Let's just straighten that up so you can see that a bit nicer. Oh, it's all right. It's already all right. That's quite nice. What you can see to my left is a couple of very closely related transactions being recorded. They're both essentially doing the same thing, which is reducing receivables and reducing receivables. One is reducing receivables in the T accounts, an area of the control environment called the general ledger, where the T accounts are and the accountant works, and the other one is in the detailed recording of the receivables in what's called the sales ledger. They both reduce the amount that the customer owes. They're unconnected, actually. They're only connected by the idea. There's one credit note in the first question, different credit note in the second question. But what both of them do is reduce the amount that the customer owes us. So in both cases, the key thing to notice, I would suggest, is this fella over here, that we are crediting receivables to make the receivables balance go down. I'd suggest that's the key feature of this question. I'm done. I'm going to go big head now. Here I go. Just wishing you very good luck with your studies. This has been BTRN, Bookkeeping Transactions, and I'm going to take a short break now, and I'll be back in 3 minutes when I do bookkeeping controls with you. I look forward to seeing you in a couple of minutes. See you soon.